While railways are a fantastic business, the US railways are very pricey. Also, the periods of high growth are behind them, plus they might suffer due to the Trump tariffs. And this stock is one which doesn't have all these negatives. And not very expensive, fastly growing, and would benefit massively from the tariffs. Rumo operates rail services in Brazil, and they're currently mostly used to transport farm products. Also other stuff, but it's mainly agriculture. Most of the volume comes from grains, some fertilizers, fuel industrials, and here they're massively expanding, growing revenue at a rapid pace. But they're not doing this while taking on net debt. Their net debt stays fairly stable over time. So all these huge investments they're making come out of the cash flow. Now that makes the free cash flow artificially low. But if you look at the operating cash flow, you can see why this company is such a growth stock. They have two types of capex: expansion capex and recurring capex. If we only take the recurring capex, which is 513 million, times 4, that's 2 billion real. If we take that against the operating cash flow, that would be 5.4 billion real in free cash flow. That would be 7 times the market cap. When you then look through all of the different markets they have, you can see they're massively expanding market share. In Port of Santos, up 8% for the full year. Mato Grosso, 5% on the year. They're beating the competition. They're investing in the business, growing and benefiting from the growing agricultural sector in Brazil. Now, why do I look especially positive to this with the tariffs? China is buying more and more from Brazil. A lot of what the US exports to China is agricultural products, like soybeans. And there's only one other big market which can replace the Chinese demand for these products: Brazil, Argentina. So Brazil will benefit massively in increased production of agricultural products. And who will ship that to the ports? Rumo. So you have a company which is benefiting from the growing market. A company which is conservatively managed, not a lot of debt, while investing hugely into profitable growth. And there's no real competition against their segment. Agricultural products can only be profitably transported via rail. Everything else makes no sense. For higher value commodities, you can always put them on trucks. Now, of course, less profitable, but for example, if you ship TVs, the profit margin is enough to absorb that. But not with wheat. The profit margins on wheat are not very big, for example, or soybeans. So Rumo is the only one currently hugely investing in this segment. And they just recently started to increase their capex again because of some major expansions. While they're investing this much, they're already profitable. 2 billion reals in free cash flow. 17 multiple on the market cap. For a railroad that has not achieved maximum profitability in free cash flow yet, is still fastly growing and is still cheaper than any railroad in the US. So let's look into what am I willing to pay for Rumo. And why is the stock so attractive? Historically, they've grown revenue at around 20%, but they even increased investment faster lately. That with the additional tariffs going on between the US and China, even if they get withdrawn, China is turning away from the US for its agricultural imports. So Brazil is gonna benefit from that, with Rumo's positioned here. I'm just gonna assume they're gonna grow for the next 5 years at 20%. Afterwards, it's gonna slow down, but they're gonna scale back investment to normalize them, and they're gonna use that cash to buy back shares. They will need to do something with that cash. They can't invest that much forever. So I'm just gonna assume 5% in buybacks afterwards, because the stock is just so cheap. 15 multiple, 10% payout in dividends with a little deduction due to tax, we come to 36 real a share. 83% upside where it is today. For a company that has very little volatility, is very fast growing, and this can easily change. If I just grow 5% faster, which they have done historically, that can happen. 20 multiple, that is a 3.5x. And even if it goes worse, revenue growth slows down massively. Even though everything plays in their favor, all the investments that they did don't work out as well. 10 multiple, even then we nearly make a 10% return. Now, there's one issue with Rumo. I don't have it on any of my brokerages. So you might have some issues accessing the shares. I might have to look into another brokerage to access those shares. But if I get access to them soon, I will definitely add some Rumo to my portfolio. It is fantastically positioned to give you the benefits of a railroad while diversifying your portfolio. I think Rumo is one of the best railroads in the world. It has massive upside. So what do you think? Write down below. Have a good day.